See, Malaysia is a very interesting country where you have foreign labourers want to come to work. Now, ask a very basic question. Why do foreign labourers want to come to work? To earn money. So can you imagine this, right? Say I come from Bangladesh, for instance, or any other countries per se. I come to Malaysia, I want to earn money so that I can remit money back to my family. So I come to Malaysia, my objective is I want to maximize my income, my earning power. But now you're telling me, no, I can only work a certain amount of OT overtime a week.
Basically, everybody have to become French.
No, then I'll be asking myself, then why do I need to come to Malaysia? It defeats the whole purpose. But you see, now if you look at the opposite way, right? Now we're telling this guy who's trying to earn the income to feed the family, I'm sorry, you can only earn this much.
And he probably wants to work 12, 13, 14 hours.
See, so are we really, let's face it this way. It's deemed as working more than necessary or more than allowed overtime is called as forced labor. But it's not a force. They want to earn income to remit back to the family.
Before we begin the podcast, have you gotten your free ebook? It's called the Build a Six-Figure Portfolio Guidebook. Now, inside it, we share with you the tips and tricks to bring your stock investing skills to the next level. The best part, it's only 10 pages long and it's totally free. Whether you're on Spotify or YouTube, the link to download is in the description, or you can go to www.firl.co/FREE or www.firl.co/free. Hello everyone, welcome back to our podcast, Best Place for Long-Term Stock Investors. Today, we have a returning guest. Right? We were supposed to film this yesterday, which was Valentine's, but our guest wanted it to be too awkward.
He was too busy with the Fed Reserve meeting. He was part of the committee.
Fed Reserve meeting. But yeah, jokes aside, welcome back to the podcast, Peter.
Thank you. Thanks for inviting me.
Yeah, so it's great to have you. And I think we're going to talk about, I think for those of you who are listening to Peter for the first time, you want to check out the podcast we did with him. He was one of our earliest guests. I think it was podcast guest number
5 or 6.
4 or 5, something like that. Also one of our most viewed, right? So go check out his life story there, how he looks at investments and things like that. Otherwise, you may not appreciate or understand where Peter might be coming from when he talks about the investments and the economy today. So Peter, we want to start off with the global economy and like what's happening. Obviously, certain words like inflation is really big. Things like the Fed's increasing interest rates. We have, Ukraine potentially going to war, or
Russia.
Depends on whose side you're on. Russia or Ukraine going to war with each other. So like, tell me what are your thoughts on some of these big events happening?
I think what has been capturing the headlines has always been inflation. But I think if you really look at it, it's important to understand what is the cause of inflation. Right. Inflation can be due to two factors. One is, of course, we call it a demand pull, or the other side, we call it a supply push. In the very layman term, demand pull is when there's too much demand, chasing after goods. On the other hand, a supply push is when there is not enough supply. Meaning to say, your demand can be constant or your demand can be low. But if there's a disruption in the supply, right, it will actually, again, cause inflation.
Right.
The situation of inflation we're seeing now is actually caused by both. But if I were to give a weightage, I'll give it 60 to 65% is more due to supply issue. Rest, maybe 30 to 35% due to demand issue. Okay, now, let's go a step further, right? Let's look at this, what supply issue we are facing. Right. See, when the lockdown started in 2020, the first thing that happened was, due to social distancing, economic lockdown, the port operations also scaled down.
Correct.
Right. So maybe give and take. Total lockdown, maybe they operate at 0%, then after that, they recover 30%. Even as we are talking now, global ports have not recovered yet to even their pre-pandemic level of operation. Okay. Now, what happens? Right. So you just imagine a very simple scenario. You have a container port, ship coming with the containers, right? The ports, the backyard is too full. You can't offload or unload the containers. So you're stuck. Okay. Now, even the ports existingly at the container, because they're short of labor, You can't clear off.
Yeah.
So why are they short of labor in your view?
Okay, first thing, of course, efficiency level.
Yeah.
Right? And things are piling up.
Yeah.
If you look at throughput of ports, it corrected substantially during the March 2020, but the subsequent rebound was very, very fast. Even as we are talking now, port throughput in the world have exceeded even pre-pandemic level. So that's where the demand equation comes in. The demand is not slowing down. But ports have not reached that. Okay, back to your question, why? Another reason is also labor shortages.
Right.
If you look at all industries at this moment, be it Malaysia, be it US, any countries, right?
Yeah.
Globally, there is a big shortage of labor. Right? So that explains why the throughput has not, or the port efficiency has not been go up. Okay, so now even when they're able to unload the goods from the containers, what happens? The container, the so-called empty containers are stuck in the port.
Correct.
Because when you can't unload the ship, there's no empty, you can't load it. So that also created what I call as, there's a lot of empty containers
Right.
being stuck at various ports or all ports in all over the world.
Right.
And they need to move these containers around to move the things, right?
Correct.
Because it's a limited supply, right?
Exactly. But now
Yeah.
all this, in Southeast Asia, one of the most congested or the port that has the most empty containers is actually Manila Port in Philippines. It's just stuck.
I would have assumed a Shanghai port, but no. Okay, Manila.
No,
Interesting.
empty.
Empty, I
No,
see.
ASEAN 5,
I see.
not Asia. It's this ASEAN region, right?
Okay.
Manila has the most numbers, right? So this is when there is this supply shortages, it cuts across all industries, right? You talk about even on your raw materials, right? It's stuck, cannot move. So all these supply issues has caused an increase of shortages in materials or in movement in goods,
Okay.
right? Be it raw materials, be it semi-finished products, be it end-user goods, which then creates inflation. Okay, now, take a step back, think about it. One way, if the intention, okay, I will put it this way. Raising interest rate can only solve inflationary pressure due to demand. Right? If the inflation is due to too much demand, I will increase the interest rate so that people will feel the pinch in their pockets or consume less.
Yes.
So ask yourself this question. How would raising interest rate at this point in time solve the inflation due to logistic issue?
Might make it harder, right? In some cases.
Exactly, that's the point. So, there's a lot of headlines, a lot of analysts are saying that, well, Fed is going to increase it's a guessing game, right?
Now it's 7 times.
Not 7 times, right? From 0 times to 2
right?
times to 4 times, now it's 7 times, right? But I look at it in a very different way. I am more, not to say controversial or to say, I wouldn't think that Fed will increase rates so fast. I would think that likely if there's any possibility, it will be more on the second half.
Right.
Because if you really look at the nature of inflation, what you point out correctly, how would raising interest rates solve the inflationary pressure due to logistic issue? And actually make matter worse.
Yes.
Because you're increasing the cost of doing business.
Yes.
Yeah.
Right? So I'm more on that stance. And again, if you look at the worst economic crisis we have in the modern history or the modern finance history, right, was 1929, right? The Great Depression.
Yes.
Right? US GDP fell by 25%.
Yeah.
So from 1929 all the way until now, last COVID, there's a total of 15 US recessions.
Okay. Right.
Big and small.
Yeah.
Right. What's interesting is of these 15 US recessions, 8 of the recessions was actually due to the Federal Reserve raising interest rate too early.
Rapidly.
From the previous recession.
So they were causing their own trouble.
What you're saying that there's a lagging effect, right? The effects of raising interest rates.
See, it's always this cycle, right? Fed always cut rates whenever there's an economic crisis. So it's the same trend all over since 1929. So whenever there's a crisis, the Fed will actually cut interest rate. The challenge is the timing of when to hike back the interest rate. So out of the 15 recessions, 8 recessions was actually due to the Fed hike the rate too fast after the previous recession, which then caused another recession. Right. So it's 50% of the cost. And look back at the last 3 recessions. Actually, none of them was due to raising of interest rate. So what I'm trying to say is, look, the Fed, I think, is smart enough to look at the history, look at the whole thing. I think they're smart enough not to raise rates too early and to kill any recovery.
Can you imagine if any job, right? If you're a baker, right, and you get 8 out of 10 of your cakes wrong, and they start to crumble and all that, I don't think you'll be a baker for a very long time. but I guess rules don't apply to some people, right? But your thoughts on inflation is interesting. So because where I draw a distinction is that, or where you're drawing a distinction is that this round is very unique because if you look at pandemics in the past, they never had the kind of systematic lockdown globally that we had today.
Correct.
Yes.
And so this led to all the port shortages. Whereas in the past, if you look at inflation events, right, it's usually due to artificial demand. In the case of, let's say, the Weimar Republic, where they print money and so people spend millions for cabbage.
Yeah.
Or in the case of the 70s, you had the oil embargoes and all that. So it's also an artificial supply lock. Right, all ports were still functioning. Will you say that is the unique characteristic of the current supply-based inflation?
We need not look far. If you look at even the ports in Singapore, it's totally congested in Singapore. If you just look at even Singapore ports, which is supposed to be one of the most efficient ports in the world, right? I've been talking to a lot of companies who exports. One of them was actually telling me they have a shipment to Australia and New Zealand stuck at Singapore ports for the last 2 months.
Wow.
The goods are there, ready to be shipped.
Yeah, it's just.
How do you solve this? Like just naturally, you just allow it?
That's a very good. See, Biden or Bidin, no, I call him. Bidin. I think last month he gave an announcement that they've already ordered. It's like a big headline, right? I've already ordered all the ports to actually in the US to operate 24 hours, 7 days a week, blah blah blah. But you see, it's not as simple as that.
Yeah.
Okay, imagine. Okay, now think about it. Port is only one part of the logistic equation.
Yes, it's the whole chain.
Your domestic trucking is also another aspect of it. So your port can operate 24 hours 7, but if your trucking capacity is not ready, you're back to square one.
Yeah.
So it's a complicated thing. And to add on to the problem is, if you think about it, shipping line used to be one of the worst business to be in, right? But what happened is all the shipping lines are taking advantage of this situation. Right,
Raise rates.
No, they call it realigning their routes. But in layman term, cutting down the number of supply of ships.
Yes. And it doesn't help that I think the industry also, because it was a very cutthroat business, very low margins, right? Would it be fair for me to say that it's an underinvested industry for quite some time, leading towards this as well? Because you look at the new ships that are being built or whatsoever, right? I don't see that kind of money being poured as if it's in the tech sector. Is that another contributor?
It's possible, but at the same time, you look at it, what happens is industry has been under consolidation. Right? I think now you look at global players as a group.
Yeah.
I think as a consortium, there's only plus minus 5 consortiums.
Maersk, Evergreen, not many lah.
5 consortiums. So technically, it's like a cartel to a certain extent, right? And out of so many for the last 20 years, this is your opportunity to make money. Of course, you make a full use of it, unfortunately.
Yeah.
Right. So back to the question, what can the government do about this? You can't.
You just let it run in a way lah.
Well, something have to happen. I mean, something needs to be done.
Yeah.
I think the only way is just keep on ensuring that the ports are being cleared. Just increase the efficiency of ports, the whole trucking, the whole logistic chain.
Yeah, I've seen big companies with deep pockets. Actually, like Amazon and all that, right? What I've read is that they're doing it themselves.
Yeah, I ship my own.
Yeah, I buy my own ships. I buy my own planes.
So does Walmart. Walmart did the same thing last Christmas.
Yeah, because you can't rely on your reliable UPSs, DHLs anymore. You got to take things into your own hand lah.
Yeah, that's crazy, man. So, but how does this, I guess, then affect Malaysia, right? Specifically, because how are Malaysian ports like, and are we facing the same kind of situation, or we have a different kind of situation with our economy? Because our economy is forever bad one. It has been bad since 1969. Right? It's always bad one.
That comes from
everyone I talk to, right, who's older than me, right? They say, right, when I got my first job, which was during a recession one. So it's a 40-year recession. So yeah, how about Malaysia?
That comes from you. That don't come from me.
No, that doesn't come from me. That comes from the people around me.
Our ports somehow are not as bad as Singapore in terms of congestion. Yeah.
Okay. But we have a lot of transshipment, right, Peter, in Malaysia?
We have. Congestion level, actually, we are not as bad as Singapore. Singapore is really a totally different story. I think Malaysia, you're right, we face a very different challenge. I think Malaysia, our challenge is more on labor. Labor is our biggest problem. I've been saying this, I think, unfortunately, too many times on various platforms. I think we got our labor policy wrong.
Yeah.
Totally wrong. Right. You see, what has been a common headline by the government, no matter which government, right? It's always the same story. That we should cut down on labours, we should actually limit access of foreign labours, we should go for more automation.
Right.
I think they have to understand a few things. Right? First thing is automation, there is an automation solution to everything.
Yes.
Every production, there is an automation solution.
But at what cost?
At what cost? Exactly, right? So sometimes it's like, look, if I can solve it using 20 labors versus automating it for $20 million, it's an easy choice.
Yeah,
Why
very
would I
easy.
spend 20 million to automate it, right?
Yeah.
And second thing is, Malaysian manufacturing, although we always think we are high tech, unfortunately we are not high tech.
Yeah.
Right? We are very labor intensive business,
Yes.
right? So what I call is very simple, right? Low volume, high mix,
Yeah.
right? Those where it's high volume, low mix, you can automate.
Yeah.
But unfortunately, those goes to China.
Yeah.
You can't beat China. Give it a sense. If you're talking about producing anything that maybe 1 million units a month,
Yeah.
those are highly automated.
Yeah.
You can just automate the front end to the back end. Right?
Correct.
Those goes to China. But in Malaysia, we're talking about maybe 300,000 a year. 400,000 a year.
Yeah.
So look, are you going to automate a machine just to produce 300,000 a year?
Yeah.
It doesn't make sense. So that's where labor comes in. But I think unfortunately, our policymakers don't understand this.
Yeah.
They keep saying, look, we have to go automate, we have to go digital, we have to go blah, blah, blah. But look, that's not our strength.
Yes.
Malaysia's strength is we are like a hot pot. People are willing to come to Malaysia. Look at this, one of the interesting characteristics of Malaysia. Right? You have people from various countries willing to come to Malaysia to work. You don't see the same in Thailand.
Yeah.
You don't see Vietnamese going to Thailand to work. You don't see Cambodian going to Thailand to work. Likewise, you don't see Thailand or even Cambodian going to Vietnamese to work.
Correct.
Right? But Malaysia somehow, we have this environment where no foreigners don't mind coming to work.
Why is that so, Peter, in your opinion? Why is that so?
I think it started because we are a multiracial country, which formed the base where there is varieties.
I see.
Right. So wait, let me try to understand what you're saying, because I'm not a tech background thing. But what you're suggesting is that because few steps, right? We cannot produce the kind of scale that we need. Therefore, it's a pipe dream. We should not be going
Don't
there.
go that route. Yeah.
But that can be an advantage, which means that what we should be focusing on is to create an environment where we can create those awkward, hard to do or very unique or specific kind of technologies, and where the volume is low, but there's still a need for it to happen.
Yes.
Is that what you're saying?
Yes.
I see. Right. So it's very specialized kind of.
It's very niche. See, when we talk about things that are low volume, okay, well, just give a sense, maybe I said, as mentioned, like 300 to 500,000 a year.
Yeah.
Right.
So that work out to be maybe 30,000 a month, or which is 1,000 a day.
Yeah.
So such a volume, right? Imagine, actually you can automate, but would you want to automate?
It's not worth it.
It's not worth it.
Yeah.
So at that volume, I rather have a labor assembling it manually. Plus, if you think about it, let's take this 300 to 500,000. Even the 300 to 500,000 may not be the same specs.
Yes.
Yeah. So it's actually not economical, but it's actually harder technically to automate as well. Is that what you're saying?
Exactly.
Right.
So that is where our strength. Look, if I am a company, say I'm Apple, for instance,
Right.
why wouldn't Apple come to Malaysia? They won't. Because at Apple's volume,
Yeah.
I need a fully automated line.
Yes.
So are we able to compete on a fully automated line compared with, just say, China?
No.
Absolutely no way.
Who in Malaysian manufacturers would commit that kind of capex as well, because it's
Exactly.
yeah.
You saw the video, right? I mean, I'm not sure. Okay, I'm not sure where I saw it, but it was many minutes ago.
Yeah.
They call it a black room operation.
Oh yeah, completely dark. There's no lights
Correct.
in the yeah.
And it was manufacturing of iPad.
Yes.
It's an iPad manufacturing facility.
Right.
Yeah.
It's called black room because there's totally zero human from
No
the beginning
operators.
until the end.
Yeah.
So the whole facility don't need lights.
Yes.
So it's called a black room operation. Or a black room operation.
Actually, based on what you were saying just now, right? The thing that first came to mind was actually Ferrari. Ferrari is still handmade, very crafted, and the reason why they do that is because there's a lot of personalization in the cars. This guy wants pink leather seats
with
this one,
red trimming.
red trimming and all that. So but at the same time, the Italians got it right in the sense that their unionized labours are obviously it's not to advantage of all businesses, but the labours are well protected. They got their technician, TVET skills and all that kind of thing. Whereas here, by right, if according to your train of thought, we should be focusing more on TVET skills rather than trying to be Apple or trying to be whatever, because we serve a market where there's need for more technicians actually.
Yes.
More technicians, more operators, better manufacturing practices rather than, we want to design the next iPhone, that's somewhat of a pipe dream in a way. Yeah.
With no offense to the companies in Malaysia, right?
Obviously,
Although
yes.
you say we are tech, right?
Yes.
But if you really look into it, right, our tech is not those tech equivalent to the
Correct.
tech of the US, no, of
Yeah,
that.
the metaverse and all that.
No, we are a manufacturing and assembly, quote unquote, tech.
Yes.
Yeah.
Right? So
Yes.
What would you say, like, okay, so I have two questions, right? Do you think that there's any political group or even any politician out there that shares the same views as you? One. And then the second thing also, I think recently with ATA IMS, ATA IMS, I never know what's the correct pronunciation. There's that labor
Issue. Yeah.
issue, right? Where essentially, allegedly, they are abusing their foreign workers, right? And then there was a like widespread fear of guys like SKP resources down in your hometown. So what do you think? Maybe these two questions.
And related to his labor policies, virtually.
Yeah.
That's why he meant.
this is where it's interesting, right? This actually ties up to the concept of ESG, right?
Yeah,
Environmental,
yeah,
social, and
correct,
governance,
correct.
right? I think the challenge is, if you look at it, the champions of ESG has always been the Western countries, or the European countries.
Right, it doesn't affect them, actually.
Exactly. They went through their own industrial revolution. They went through their whole, cyclical, whatever you call it, right? So then they start to look at, frame all this so-called what is environment, social, and governance.
Yes.
But they have moved away from manufacturing
Correct.
base.
Correct.
So they start to impose on all this concept about, what is called environmental, what's called social, what's governance. Very good example, right? They've already cleared all whatever forest they have many decades ago to do all the plantation.
Yeah.
They're done with that.
Yeah.
So now they say, okay, for environment, all these new countries like Malaysia or emerging countries, you cannot clear any forests because it's very damaging. The US have already cleared all the forests to plant all the soybean crops, but now they're telling you, oh, sorry, you can't clear any forest to plant your palm oil plantation, right? So they have moved away from there.
Yeah.
So I think it's unfortunate. The concept of ESG is good,
Yes.
but I think we need to move. It cannot be. It has to be by region specific.
Yes.
Take into consideration of at which stage of development are those countries.
Yeah.
Okay, take this labor issue for instance, right? As I mentioned earlier, see, Malaysia is a very interesting country where we have foreign laborers want to come to work. Now, ask a very basic question: why do foreign laborers want to come to work? To earn money.
Yeah.
So can you imagine this, right? Say I come from Bangladesh, for instance, right? Or any other countries per se.
Yeah.
I come to Malaysia, I want to earn money so that I can remit money back to my family. So I come to Malaysia, my objective is I want to maximize my income, my earning power.
Yep.
But now you're telling me, no, I can only work a certain amount of OT overtime a week.
Basically, everybody has to become French.
No, then I'll be asking myself, then why do I need to come to Malaysia? It defeats the whole purpose. But you see, now if you look at the opposite way, right?
Yeah.
Now we're telling this guy who's trying to earn the income to feed the family, I'm sorry, you can only earn this much.
Yeah.
And he probably wants to work 12, 13, 14 hours.
Yes.
See, so are we really, let's face it this way.
Yeah.
It's deemed as working more than necessary or more than allowed overtime is called as forced labor.
Yeah.
But it's not a force.
Yeah.
They want to earn
Exactly.
income to remit back to the family.
Yeah.
And it's arbitrary anyway, this 40-hour work week kind of mindset. as well.
Who actually determines that whether it's enough, 40
The
hours?
UN
It's
lah.
the UN, ma, you see?
UN
So
That's why I say they want everybody to be France, basically.
Yeah.
That's what they're saying.
But yet at the same time, think about it, all this boils down to cost.
Yeah.
Why they come to Malaysia again is cost.
Correct.
So
We
like-
find them cheap and they are willing to take the income.
Exactly. But see, imagine if we really restrict all those things, right? We pay higher, okay, your foreign labor, okay, I limit your ability to earn overtime, but let me compensate you for a higher basic, for instance.
Correct.
But then you translate to higher costs. And what is this fella's going to do? These brand owners or whatever say, oh, sorry, you're too expensive. I'm going to go to Vietnam, or for instance.
Yeah.
Yeah.
It's ironic, right?
Yes. Actually, sometimes even ESG proponents actually contradict themselves. I was just sharing with MJ. I don't know whether you know about it, Peter. They allowed gas turbine power generated plants to be deemed as ESG compliant. Okay. And then today they just came out, they got slammed, the EU got slammed for allowing that to happen. So the US is slamming the EU, saying that why did you allow fossil fuel to be part of ESG? But then the EU says, hey, come on, we're not going to get into carbon zero or fossil fuel in like 5 years or something, So you see.
I always remember the story that the Chinese response to the EU when they asked, hey, can you be more, because they are known to be some of the top 2 most polluted country in the world, right? The Chinese just say, we don't mind going solar if you pay for us.
Yeah.
You pay everything, you subsidize everything, we go solar immediately tomorrow.
Yeah.
I think that's a good argument because it's like, you ask the typical Chinese, you think they don't want I always remember this story. I went to Shanghai. So the minute you start into Shanghai is basically cigarettes.
Yeah,
right?
smog.
Like I go into the taxi, okay, it's so amazing. I go in a taxi, and this was maybe 10, 12 years ago, so it's probably not as bad now. But I go into a taxi, okay, so the taxi driver winds down the window, so all the smoke is coming in. But you think that's it? No, that's not it. He takes out a cigarette. I can't. But what's interesting is that I had the privilege to go to this hotel where only the high-ranking generals get to visit, right, in Shanghai. And the minute you go into, it's like a Batman's mansion. And the minute you go into literally, the walls are like a bush. Then the gates is like one of those black gates. So you go in, it's like a mansion. After 10 seconds, the air literally changes. So what I'm trying to say is that I think even, people who are Chinese and Indians, the culprits of global warming or what you call it, I think they also want clean air, right? Like, come on, right? They also want, it's just that they don't have a path now, right?
Yeah.
Why wouldn't Europeans want to produce their own country?
Yeah. And then I think what I admire also about the Chinese, not to say I admire everything about them, but their response to the, what do you call it, all this pollution, remember, they cut the electricity supply. They said, okay, we got carbon emitting. Okay, we limit the hours. Then who suffers? The Westerns.
You don't coal, right? No, coal is polluting, right?
Yeah, which is like a mild hypocrisy on Tesla's side. I know you're trying to, but at the end of the day, you still have to use some sort of fossil fuel to justify. Now, speaking of that, I think we can move into maybe like, before we go into specific industries, I want to ask you, right, and since this is still on Malaysia, so GE is coming up, right, or supposed to come out. Who's going to win? But what do you think overall, and
I got a very unpopular answer.
That's why you're on here, Peter. That's why we need the views, man. We need the views.
Just for some context, and I don't think we'll share on the podcast. Peter and I, we had a discussion on who is suitable to be PM, but definitely not on air. But anyway, share your views, Peter.
Let's take the upcoming Johor state election.
Correct. Are you going back to vote? Your constituency still in Muar, right? Muar.
That is a secret. My take is, UMNO will have a landslide, or the Barisan Nasional will have a landslide victory. Right? Of course, conveniently, people will say, well, because due to COVID, people then are not willing to come out to vote. The turnout rate is low, blah, blah, blah. But I think if I take it in a very more realistic perspective, I think even if the voters turnout were to be high, I don't think it will change much. Right? I think a big part of it is, I think there's this disappointment for the Pakatan Harapan. Right? And this disappointment can be quite long-lasting effect. Right? So either you can say people are fed up, either they don't go back to vote, but at the same time, the Barisan supporters will still continue to vote. Right? So if we were to translate this into the GE, I think my disclaimer is whether depend on which side you're at. So I would say fortunately or unfortunately.
Two sides of the coin.
Two sides of the coin, right? My take is Barisan will win big. Barisan will win big.
Yep.
Right? I think even to extend 2/3, I don't
majority
think it's not possible. I don't think it's possible.
Super majority,
2/3 is possible. My take is DAP will lose more than half. Of course, unfortunately, sorry. I think PKR easily 80% will be lost. I think Bersatu will be wiped off.
Okay.
What about Muda? You think? What about Muda?
Muda will win. My take again. Right? I could be wrong, right? Muda will win seats, but you're talking about maybe 8 seats plus minus. They will win seats, but not strong enough to be a voice, of a very strong voice to be heard.
Right?
Because like it or not, we always talk about the important part about a political party is the machinery. Right? So what actually is this machinery? So in a very layman term, are you able to pull your supporters out in every corners of the country out to vote? Like in the villages, for instance. You just look at the Melaka election before this, right? What Barisan was able to do was actually to send buses to all the rural villages and ferry out the supporters to vote.
Yeah.
Then you think about it, would new political parties like, for instance, Muda, would they be able to do that?
Do they have the economic might to
Financing,
be able to do that?
Yeah, correct.
Sorry to interrupt this podcast. I know it's a little bit annoying, but I want to tell you something that I think can be really helpful to you. I can tell you're really interested in the stock market and want to learn more about it so that you actually know what you're doing, especially when today things are getting more complex and complicated. That's why we came up with the Stock Investing Blueprint, or SIB. It's our signature e-learning program that teaches you how to pick the right stocks most of the time, buy and sell it at the best possible time, and manage your stock portfolio systematically. It currently has more than 10 hours of content and it's growing. You'll also be part of a group of like-minded investors that can help speed up your learning process. To hop on the program, click on the link in the description or go to learn.firl.co/courses/SIB.
So
What do you think if Barisan wins, right? What do you think that means for the economy? Because our view has always been that, for some reason, despite all the corruption or alleged corruption of Barisan, they did create a stable economic environment for business and things like that. And of course, with GST, we could see that a lot of the shortfall from, let's say, corporate or personal income taxes was being handled as a result of GST, because actually a lot of people do not qualify to be in the tax bracket. So there needs to be a way to...
It's a very narrow tax bracket.
Yeah, very narrow, 10% now, right?
Yeah.
So what do you think this means for the economy if Barisan wins? Because I think one thing that's not talked a lot about is that, like, people just want, and this is the problem with the opposition for me, is like, for me, what the opposition represent is anti-BN, right? Or anti-what. So it's a very reactive thing, right? They don't stand for something, or at least it's not like their key
It's
message.
not clear lah. It's not clear.
Their key message lah, exactly. So whereas Barisan, whether you agree or not, they stand for something, right? So what do you think this means for the economy?
again, disclaimer. I'm politically neutral.
Uni measure and describe the potential effects.
Yeah.
Right?
Yeah. I actually agree with you, right? See, let's take a perspective of foreign investors.
Yeah.
Right. What matters most to foreign investors, right? Is actually stability,
Correct.
and delivery.
Yes.
And you make quite a good point. I mean, if you think about it, I mean, despite all the corruptions and things like that, right? I think Barisan has actually proven that they have the track record in managing the country, right? I always like to draw this perspective from Indonesia, right? No Suharto, the
former dictator.
former dictator of Indonesia, right? No, there's always been very bad publicity about him, right?
Yeah.
Corrupted, but
Genocide, whatever lah.
yeah, but there's another aspect of him where you look at it, in his 20 over years in power in Indonesia achieved 7% GDP every year for 20 over
Yes.
years. And during his administration, there is no rice shortages in Indonesia. And immediately after his fall, after the Asian financial crisis, no rice crisis was widespread in Indonesia. I mean there's always two sides of a coin.
Correct.
Right? It's always a balancing game. Ultimately, it's really, as an individual, what matters more to you.
Yes.
Right. Again, no, do something that, it's nothing wrong, it's nothing right. For some people, no, I just want progress for the country, I just want growth for the economy.
Yes.
For some people say, no, I want accountability, I want clean government, so on and so forth. But it's just a choice of which one that you choose, you stand for.
Quite interesting that you brought up this point about growth, progress, economic progress, and then accountability, transparency. Would it be fair for me to also make this correlation? Those that demand accountability, transparency, and all that are usually those that are well-to-do, more educated, more urban.
Yeah.
That means they don't need to worry about their next meal.
Correct.
But the struggle is those that want the growth and all this are those that, hey, they worry about their next meal, probably in the slightly lower income group, and they for them is actually progress and their social upwards mobility that matters more than that of this transparency and all that. I mean, I look back at Thailand, when they had this guy, Abhisit, the elite, the prime minister who was very well educated. Yeah, and then he had a very short reign compared to Thaksin.
Yeah.
But he was in a political elite. He only appealed to political elites, the well-to-dos and all that lah. So would it be fair also for me to say that it's actually striking a balance? And where do you think that balance should be for Malaysia at this stage of our growth actually? Growth versus probably utmost accountability and transparency.
Yeah.
I know it's a very controversial thing, but I mean, hey, since we already opened the can of worms, I mean, we even had friends that were talking, these two comparisons, Suharto and that Tanzanian government, I can't remember what's his name, super clean, never corrupted, but that the country, but very poor, no economic progress for the country. Yes, he's incorruptible, but there was nothing done to the country. I can't remember which country. Was it Tanzania or something?
I think part of the problem is that we compare ourselves too much to Singapore.
Yeah.
And unfortunately, I do think that actually no country in the world has got the luck that Singapore has, which is that they had the leader that they have, which is Prime Minister Lee Kuan Yew. I think that when you look back in 100, 200 years time, right, the guy shines a very bright light. And I think that's just pure luck. Like,
how many Lee Kuan Yews can you produce?
The reason I say that is because he has no incentive to build Singapore. Because he was a highly educated person. He was a Cambridge lawyer, English speaking in the 30s and 40s. Why give up all of that to run Singapore? And it took a special individual to do that. So I think that's probably part of the reason why Malaysia are frustrated, because they're kind of like looking towards an ideal, and a very lucky ideal that we can't get. But anyway, yes, back to John's question about your question.
Yeah, so if coming back to your hypothesis that if BN wins a landslide, there's definitely going to be protractors that say, hey, you know, we're going to re-elect back a government that's corrupt.
MDB 2.0 coming.
And all this kind of thing. So what would you, say to that? And also, should that be secondary? We're not saying we're condoning corruption. No, that's
exactly,
wrong, right? Yeah. But what we're saying is that where do we strike that balancing point at Malaysia's stage today, you see?
Okay, my take, again, I really re-emphasize your point, right?
Yeah,
we are not saying that it's fine to have corruption.
Correct.
Of course, in the most ideal situation,
yes,
there should be zero corruption.
Correct.
But let's be realistic, right?
Yeah.
Can any country, like I said, other than Singapore, can any other country achieve an ideal zero corruption situation? Just being realistic about it.
Yeah.
Idealistic is idealistic.
I mean, the closest we get is the Scandinavian countries, but then there's so many different nuances.
But when you're born on a mountain of oil, right?
Yeah, exactly.
You came out. It's not the water, the fluid. It's oil.
You have oil bath every day, right?
You born. It's not your mom's placenta. It's oil. So
population size 5 million, so sparsely populated, and then very well educated. It's very different. People don't look at the nuances of all these contexts. So coming back to my question.
Let's go back to human nature, right? Let's talk about in the human perspective.
Yeah.
Let's take our fourth prime minister per se.
Yeah.
Right? Okay. During his administration looks, there were also corruptions.
Yes.
yeah.
But people are able to stomach it or live with it because the economy is growing.
Yes.
Yeah.
So in a very simple human perspective is that for a human, as long as I'm also making money, I can live with the fact that you take some kickback here and there.
Correct.
They can live with it.
Yes.
But what is the trigger point is if the economy is going down, people are not making money.
Yes.
But you're still building a big war chest for yourself.
Yes.
I think that's where the balancing point or the trigger point is.
Correct.
Right, on that perspective.
Correct. Yeah. I mean, I just finished Nazir Razak's book. And what surprised me, many insights, but one of the insights that surprised me was this, Peter. He said that, okay, obviously it's coming from his point as a brother to the sitting prime minister. He said that Najib did try to put a stance of moderation, corporate culture, and all that kind of thing, but it actually backfired on him in that perspective. That's why he had to go back to a lot of what the politics of the past, which is conquer and divide, racial divide, and all that kind of thing. So,
okay. One MDB aside, right? Of course, that's a landmark for. Okay, let's put one MDB aside.
Correct.
Right, and just look at economic policies perspective. I think Najib did quite a lot of good economic policies.
Exactly. GST was one of them.
GST is very good.
Yeah.
Removal of fuel subsidy is absolutely needed.
Yes.
Right? And honestly, I mean, in terms of striking racial tensions, I mean, this is the most sensitive part. If you compare with the past prime minister, other than Tunku Abdul Rahman,
yes,
I think he's the least that actually...
Correct, he's very neutral actually.
He's quite neutral. He don't play this court. So there's only him and Rahman that's actually more...
Correct. The rest were all
Yeah.
I mean, this is our opinion.
But of course, people forget. I mean, for a lot of people voting today, history began in 2000 and
Correct.
so I mean that's why people forget. Like it's always to the worst right now, right? So yeah, so maybe let's move into some of the industries now, right? Like globally, what are some of the existing industries, the old industries that you're thinking there's going to be a rebound? Because this year, one of the big things about the stock market is how growth is declining, growth stocks, so to speak, and value is making a comeback, so to speak, right? And I use value in the way the commonly accepted understanding of value, where it's low PE and low price to book and all that. So that version of value is making a comeback, which usually implies old industries like your oil and gas and all that. And then the new industries, the growth is actually tanking. So what do you think about this right now? And I do know that when you were on the podcast in May, I think last year or April, you did talk about how you saw that tech was not very was overvalued on the more overvalued side. And of course, right now you've been vindicated. Some of the stocks are down like globally, it's like 40-50%. I think in Malaysia it's like not as bad actually. So we have lost less, 20-30%. Yeah, but what are your thoughts?
I like your disclaimer of value, right?
Yeah. Because there's the marketing definition, and then there's the actual Warren Buffett definition of like buy future cash flows and buy it for a lot less.
I like Charlie Munger's definition.
Yeah.
You know, I'm not sure if it's quoted by him, but I was told it's quoted by him last year, right? He was saying that actually all investors practice value investing.
Correct.
The only difference is some people see value in a good company and some see value in a bad company.
Yeah.
You see, the switch between growth, or so-called, following the so-called growth and value, right? It has been a cycle.
Yeah.
Whenever the growth is overvalued, right, investors will ask, what is cheap now? Say, for instance, if everything has gone up to 30, 40, or even 50 times PE multiple, then they ask, let's look for something that's single digit.
Yeah.
So then they'll all fly or all zoom to those single digit PE.
Yes.
So that's deemed to that cycle.
Yeah.
Right. So once that low value bring up to say maybe 10, 20 times PE, then say, hey, this one is a bit expensive now. Because see, when money flows out from here to this sector,
correct,
they will exit from the so-called growth.
Yeah.
So then the growth actually drop in terms of share price, which then the PE will drop. Right. So then they look at it, hey, for the same valuation, say for instance, parity 2020, right? This one got more growth. Yeah. So let's go back to growth, right? So then again, they'll move it. It's a common cycle.
Yeah.
Right? Everything is cyclical in the market. The only difference is whether the cycle is a short cycle or the cycle is a long cycle. Let's take tech, for instance. I think, unfortunately, a lot of people don't realize tech sector is a cyclical sector.
Yes.
Yeah.
The only difference is this time around, the cycle is just longer.
Yeah.
But it doesn't eliminate the fact it is a cyclical sector.
Yes.
The last rush of tech in Malaysia, for those who remember.
2017, right?
No, it was 2014-15. That was the last rush into it. 16-17, it died down. Then came 2020, the whole thing just came again.
Yeah.
Right? Just that the only difference is now it stretched longer from 2020 all the way to now. But it's still cyclical in nature. Right? So to back to your question, I think the shift is always, we call it rotational play. Between so-called the growth value.
Yeah.
Right.
Yeah. Your thoughts on regulation coming into play, because a lot of these big tech companies are growing to such a size and mammoth. And in the past we have the Mabel AT&T breakup. You also, I mean, if you go back even more longer, then you have the Standard Oil kind of breakup, right? Do you foresee, I mean, on a global scale, right, these tech companies growing so large that the governments of the day actually want to break it down through either regulation, through either breaking these monopolies, and your thoughts on that actually? If
you look at US, the Democrats are actually pushing for it. They're pushing for breakup, right?
Yep.
To a certain extent, I actually do agree with that. Right? I think the tech companies have reached a scale, they are so big that there is no room for a new competitor to come in.
Yeah.
Right? So look at 100%. All the data is being controlled by just a few places. Your Meta per se, your Google, your
Amazon.
Alibaba, your Amazon. That's it.
Yeah.
There's really no room for newcomer to come in.
Yeah.
Right. So imagine a world going forward where all the data of the world is controlled by this handful of companies.
Yeah.
Yep.
So unfortunately, to a large extent, I am also a proponent of breakup. They need to be broken down so that there is no concentration of data in the hands of only a certain companies.
Okay. And in that same vein, China is trying to do the same thing. So how would you, in a way, advise as investors, if let's say your hypothesis comes true and they break up, what are the risks and how do we protect ourselves against this kind of risk? Because you see the same being done on Tencent, Alibaba, and how do investors actually protect themselves against this if that risk is true? Because I was just listening to a US hedge fund manager podcast about Meta, and they said that at the growth rate, at the valuation of where Meta is, right, it's impossible. I think they're trading at how many times PE? And
17.
Yeah. So it's like, it's insane, for a company growing at that kind of clip, right? But here is what's looming besides the tech sell down. It's actually the risk of deregulation and So how do investors protect themselves against all this actually?
I think my perspective on China is different.
Okay.
I think where China is coming from is very different from where the US is coming from.
Yep.
China is not really targeting the tech industry per se.
Okay.
They are just trying to realign business practices. So if we really look into so-called the clampdown, or not the clampdown, right? The attack on them, notice it's all for very different reasons. Right? You take, for instance, the first of all, Alibaba.
Yeah.
Alibaba is a very straightforward issue, right? You look at their loan division.
Yes.
Right? They are taking all the profits.
Yes.
But the bank is taking all the risks. So the government is not against it. What the government did was they just want to balance out and say, hey, you want to give this loan to consumer. Previously, Alibaba don't give out much capital.
Correct.
Because it's all by. So what China government is just saying, well, I allow you to do, I'm not against you doing this business.
Yes.
I just need you to put in more capital on your side.
Yes.
Right. So that you share the risk with the banks. So it's just realignment. When it comes to Tencent, right, it's always this issue about the younger generation spending too much time on their mobile games.
Precisely.
So they're saying, okay, I'm going to limit every week, there's only a certain amount of hours you can play.
Yes.
When it comes to online tuition or online education, right,
Yes.
with the actually clamp down,
Yeah.
what the government then realized was, right, you see, in the common exam or China's common exam, the rural children are doing better and better. Whereas the rural children are lagging behind.
Urban children.
Urban are doing better, whereas the rural is lagging
yeah.
behind. Right? What happened was because the urban, they can afford to pay for online tuition, whereas the rural, they can't.
Yeah.
So then the government just say, well, I'm going to readjust this to make sure there's equal. So you think about implication, right?
Yeah.
Long-term implication, the urban children, you multiply this by another 10 to 15 years, what's going to happen? You're going to have a very big social divide.
Correct.
Children from urban will progress very well, while children from rural will be left behind. So what the government is saying, I'm not against online tuition, but I just say, anyone can provide online tuition, just that it can't be for profit-oriented. They're not against it.
Yeah.
You can continue to do it.
Actually, it's a smart way of trying to realign shared prosperity, equal prosperity.
Exactly. So see, it's very different. So yeah, it may sound like, well, this is like, we are in a what we call it, a laissez-faire economy, this is a free cap market. But I think China has look at things differently.
Yeah.
I think you use a very good word. Shared prosperity is what has been the emphasis of China.
Correct.
Yeah.
Not so much of purely capitalist market, maximizing profit. They want to make sure that there is really no huge gap in the China as a whole.
Correct. They're not against capitalism, but they said when you grow the society in a capitalistic manner, hopefully everyone gets the same pie.
Yeah. They share the pie.
Yeah.
But with regards to Alibaba, your point about that loans one, right? Like, how is that different from like an investment bank? Where the whole idea is that, okay, look, I've got a bunch of data. I can tell the bank the risk profile of all these people. So then the bank just loans these people the money because I can see, they can see all the consumer behavior. And Alibaba just takes a fee.
No,
that was the logic, right?
No, you must compare them to people like, say, for instance, like let's say for Malaysia, say Aeon Credit, for instance. Right? See, Aeon Credit, they will have to take a loan themselves.
Yes.
To raise funds.
Yes.
And then they loan out the fund.
Correct.
And then they earn the spread from it.
Yeah.
So when companies like Aeon Credit, okay, I shouldn't use company names, that sounds bad, right?
Right. No, it's okay.
Right. So they have to take the risk because they have to incur costs.
They hold the bag. Originally, they have to hold the bag.
But not for Alibaba.
Alipay
Alipay
or Alibaba, yeah.
No, they are a middleman, but I'm not taking any risk, but I'm in between the profit I'm passing to the bank, I'm taking the big chunk of the profit.
Yes.
Yet I'm not taking the risk.
Yeah.
Right.
So what the China say? Yeah, can. You must take on more capital. Capital as in put in more.
You have to be, in
capital.
a way, in short, you have to be regulated like a bank lah.
Exactly.
Basel 1, 2, 3 requirements lah, tier 1 capital and all that kind of thing.
So
they wanted to get away loophole.
Alipay has been operating out of the purview of China Central Bank.
Right.
Which you are in the business of lending money.
Correct.
But yet at the same time, you're not under the purview of.
Correct.
Doesn't sound right.
Yes.
Right.
And also, I think it will be a ticking time bomb if they look forward, right? It will be ticking time bomb to almost like a mortgage-backed security problem in the subprime crisis and all that. Because you think about it, all the risks being borne by the bank, and yet they have no say about credit scoring or risk management for all these, right? So it's kind of
Right, it's an interesting discussion. I think it's for another time. But
Yeah.
I think there's something to be said of the risk part. I think someone in Alibaba would say that we took the risk before that to build the platform
network and
that
all that.
allows so and so the ability to just come to one platform to then do business. And that's the big advantage, and to have all this data to see. But anyway, that's a separate discussion. So how about like some of the sectors that have gone down a lot, which are the tech sectors, and would you then now change your view that it is obviously it's not as overvalued as before by definition, it has gone down. But do you think that this is a level that would get you excited about it, like it did maybe in 2017, 2018?
I would say not really. See, before this correction, I think the tech index in Malaysia hit the peak in November.
Yeah.
Until November, our tech PE, as a collectively, right? I think it's traded around 60 times PE multiple. From November until at this point in time, I think the tech has technically corrected plus minus 20%. Of course, rebounded a bit, but it's take 20%. So likewise for the PE has actually gone down by 12 points. So it brought up to 48 times PE.
Okay.
Historical level, Malaysia's tech industry PE as a whole, collectively, is around 30.
Average. Median lah.
Average is 30. Median is around 30, right? So that gives you an answer, right? In the sense, yes, it has dropped 20%. But has it dropped to a reasonable level? Personally, I'm not so keen yet, right? Because bear in mind, although it's dropped 20, you're still talking about 48 times on average,
Right.
versus 30 times.
Right.
Which has been the historical level.
But then there's a skew, right, Peter? Obviously, when you look at any median or average data, there's a skew of very highly priced companies that command 60, 70 times
Jeff
PE. And then at the same time, you have, okay, I'm trying to avoid specific names too. But you have certain companies within the niche that commands like, I don't see anything less than 20 for any tech lah.
I think I'll ask the question this way. I know where you're coming from. I think, the tech sector in Malaysia broadly can be separated into four broad categories, right? Your OSATs, your ATs, your EMS. I can't remember the last one.
No, it's four lah. EMS, ATs, OSATs.
OEM, I don't know that. No, not
OEM, very small lah. It's very small. I mean, sometimes they consider someone like Yuchi as an OEM.
Like where do you rank like Unisem, for example?
Unisem would be an OSAT.
OSAT. Okay, so anyway, let's say there's three, right?
Yeah.
Which area do you have you looked into the different areas about how cheap they are, and also like which one you're a lot more interested in?
I think the thing is this: within all the three categories, there are companies with very high PE.
Yes.
Yeah, correct.
There are also companies with, not to say single digit cheap per se, but still values can be found.
Yes.
So to me, I won't categorize, I won't split myself to see, okay, whether I'm going to focus on EMS, focus on OSAT, or focus on ATE.
Okay.
Yeah.
But I'll focus more of individual company basis. Like within these companies, these growth companies, which are still value priced with good growth prospect.
Yeah.
That I'm not overpaying for the growth. I'll actually use that approach because, see, let's take AT for instance, right? Or automatic testing machines, right? Tester machines, right? Although we lump all these companies within ATE sector, but yet they are still very different. One from another.
Exactly.
So that's the challenge.
Yes. I mean, like for example, I just met a company I cannot name. Sorry. So they were actually in precision manufacturing. Okay. But they're moving into building testers. I just found out. Right. And then because of that, they command very high PE. The struggle is this: when you look at averages, when you look at peer-to-peer comparison, as you rightly pointed out, right? Until and unless you know the business that well, right? You don't even, I mean, they could be the same segment, ATE, but they are building testers for different sub-segments that command different TAMs, command different growth rates and all this kind of things. I think that's what you're trying to point out.
And
right,
also,
Peter?
let's talk about building testers, for instance, right?
Yeah.
So if you go a step further,
Yeah.
look into it, you can build your own testers. But then the next question is, how many of the parts are really your own in-house
Precisely.
parts?
Precisely.
And how many are actually outsourced parts? Say, for instance, right, the measurement units. For all testers, the most important is a measurement unit. The one that
Correct.
actually do all the parameters, right?
Correct.
I can buy a measurement unit from foreign companies in
Yeah.
Japan or even in German.
Yes.
I just use the measurement unit and voila, I can build a tester.
They call
They're
system.
just an assembler lah.
Actually, they call the right term would be systems integrator lah.
Yeah, it sounds funky,
Yeah.
sounds sophisticated, right?
Yeah,
And the
But you
systems
just
integrator.
you put Lego blocks together.
but technically, you're right. You are building a tester machine.
Yes, yes.
So that's why I said no. Although the capability is different, you need to go a bit deeper to really
correct.
For sure.
go down the. Are you really having that capability to build a real tester? For me, is you are when really the whole unit is your own proprietary knowledge, your own proprietary technology.
Yes. And here comes the related question, Peter. If we were to look at investing in Bursa as a whole, I mean, we can't deny that a lot of the growth of the Malaysian export economy comes from semicon. But are there still other industries in general that Malaysian investors, because a lot of what the people we meet who do not have a tech background, who do not have how would I say, familiarity with semicon, they would like something of a business, a simpler business to understand. So you're talking about the normal FMCG companies or even plastics. Plastic may be a little bit difficult. Maybe biscuits, talk about biscuits, right? But at the same time, we are encumbered by a very small population. Even our car industry, I think if you just limit it to here. So can the Malaysian investor avoid investing in the tech sector in a way? Can they?
You can. Let's take my take on 2022, right? In fact, the industry that I favor for 2022 is actually more of finance industry, consumer, industrial, and also building materials.
To write the theme of the comeback lah.
Yeah, not so much tech. Right,
But over the long run, okay, so let's just say if someone were not that, how do I say, not that familiar or not that rapid enough to change themes and buying over the longer run, can he or she avoid tech altogether?
Well, that it really depends on whether do they know what they're buying into, right? See, I mentioned earlier, tech has its cycle.
Yes.
But if you have the holding power to stomach that cycle, in the long end, you still do pretty well, right? So again, right, it's something really very individual perspective.
Understand.
Right?
Understand.
Look at even some people like my favorite example. They bought public bank.
Yeah.
Right. What was my number again? Assuming one person invested in 1987. That's when the new Bursa that we have now is 1987. Before we have Bursa, but not the Bursa we have now.
Yeah.
Right. Every 1,000 in public bank in 1987, totally do nothing, forgot about it.
Yeah.
Is worth 500,000.
And that's not including dividend reinvested, right? It's just pure.
Oh, including dividend reinvested.
Okay.
So every 1,000 is 500,000.
Yeah.
Right. So and that's bank.
Yes.
Right. So likewise, it's not so much of which sector can generate you the ultra return. It's more on really what company you invest in that generates that ultra high return.
Yeah.
Right.
So hopefully you don't mind me being a little bit of a devil's advocate. Right? The banks, right? They enjoy the prosperity of the 1980s, the roaring tigers and all that kind of thing. Do you foresee that being replicated again?
I think the challenge for bank now is actually the Basel regulations. The capital requirement.
Tier 1, Tier 2, Tier 3 capital.
It's really providing stress. Look at Malaysian Bank. The ROE has been on the decline since the implementation of Basel III.
Okay.
I think, let me recall, I could be wrong, but off my head, the downtrend actually started way back, even maybe 2013.
Okay.
Yep.
That was where the peak of Malaysian ROE was. But once Basel III came into force, every single bank, be it even public bank, the ROE was on the gradual downtrend. So regulatory requirement, this is maybe not regulatory requirement. Basel requirement actually has caused a big pressure on the ROE.
I see.
And ultimately, like it or not, banks are always valued on ROE. Right? That's why banks are not performing because when people say, hey, no, it's a downtrend ROE.
Yeah.
But I think we have to be fair to a certain extent. No, the downtrend is really more due to Basel requirement rather than anything else.
In terms of population growth, and we are coming into a more aging society for Malaysia, does that not also bode well, not just to banks, but also in general in economy? Because I was studying MAA data that day, Peter, and correct me if I'm wrong. I think Malaysia has not broke through the 600,000 new cars per sale per year over the past 10 or 20 years. And I in my assumption, is because of our population stagnation in a way. And the other thing is that unless and until we can really tap into the Asian markets, then only our Malaysian companies have a slightly bigger TAM. I mean, compared to, don't talk about the glove guys and all that who export elsewhere, but more locally domestic, like the automotive guys, the banks and all that. Will the population size be a stagnating factor for their growth? That's where my question is coming from.
Okay. There's a very simple way for Malaysia to hit 600,000 total industry volume. Right. Put an age limit on the old cars.
Oh, like Singapore lah.
Let me look at the number of old cars that are in the road. I'm not against old cars, but you see that's another way to look at it, right? I mean, we can encourage car sales.
Yes.
As long as we put a limit of maximum 15 years.
So that will help the banks also.
Yeah.
Right?
Exactly.
But the challenge to this is, Malaysia, we have a very big second-hand car market. If they were to do this, I tell you,
all the APs lah,
the second car market will be wiped off.
I see.
It's quite a big economic impact. So that's why it has been, if I recall correctly, I think the year 2000 plus, I can't remember exactly, they were actually toying with this idea.
I see.
To put the age limit on the car. But then the government realized, right, the implication or the domino effect on the second-hand car market
will wipe you. Yeah.
Very, very bad.
Yeah.
Very, very bad.
Yeah.
That's why they actually hold their horses. That's why they chose not to do anything. But back to our point, right? We can hit 600,000. We just put an age limit. No, we hit 6,000 very fast.
Very true. Depends on which lever you want to pull on him, correct or not?
Yeah. We can.
Yeah. And related to that, so you've mentioned that, okay, good, your hypothesis or your opinion is that you can avoid not investing in semicon. But the other industries, where do you think we can go from here? What are the other matrices that we should look at? For someone like, let's say, an OFI, I know I'm trying to avoid names, but I'm just using the Nestle's and all. The Nestle's of this world, the Dutch Lady, right? I mean, I've been looking at Dutch Lady, their revenue is just flat. While we have less children, people drink less milk and that kind of thing. So it's also related to upcoming FMCG companies like Farm Fresh and all that. If we were just to focus on the Malaysian market, what are your thoughts in terms of growth and what are the stagnating factors?
If you think about it, you made a very interesting point. See, why tech industry in Malaysia are growing faster than other industries?
The TAM is bigger, right? In a way.
Because they're all exported.
Yeah, exactly.
so the key parameter is not because they are tech industry. The key parameter is because export sales is the biggest chunk of their sales.
Yeah, correct.
So likewise, if you look at Malaysia consumer without naming names, right?
Yeah.
Like what I said, why Dutch Lady is flattish?
Yes.
Why Nestle is to a certain extent flattish or growing? Because they are only focusing on Malaysia sales.
Correct.
So what is important for a consumer company or any other company, be it building materials or whatever, maybe a bad example, building materials, industrials or any manufacturing-based products.
Yes,
right?
yes.
Is how big is your export market compared to your sales? So if a company say, for instance, I have 70% local sales, 30% export sales, so definitely the fate of a company is more dependent on local situation. But if it's opposite, say, 70% of sales are actually overseas, Malaysia is only 30%, then really, the ability to grow is depends on how hard they work.
Correct.
Just really how hard they work.
Yeah. It's something like, if you look at a convenience store, it will be the difference between I already hit plateau of number of stores I can open, but it's same store growth, sales growth. Versus that of can I grow more stores?
So what I'm trying to say is the tech industry is growing fast. It's because it's an export-oriented business.
Yes.
They are not depending on the local consumption.
Correct.
So likewise, you can find, as long as you be a bit more hardworking, you go and look at other sectors, as long as export sales constitute a bigger part of their business. There's also equal opportunity to grow. Not only so, it's not the tech per se.
Correct.
It's the export sales per se.
Right.
Yeah.
So then, like your thoughts on banks, and you say that they have this problem with
ROE.
ROE and Basel Accords essentially. Then why do you think that in 2022 it's going to be a year where maybe they'll make a comeback? And then we'll move on to some of your other thoughts on the other guys, other industries.
Well, you look at bank. Bank actually has been a laggard for many years. Not even 2020 COVID, right? Even before that.
Pre-COVID lah.
Pre-COVID. Bank has been a massive laggard, right? But look at in terms of deliveries, right? Loan growth is doing very well. They've been doing very good loan growth. Yeah. Balance sheet is strong. It's way beyond the 1997 Asian financial crisis.
Yeah.
Right?
I think that in a way is a blessing in disguise for Malaysia, right?
And valuation is actually cheap.
Yeah.
Okay, valuation, look at banks are usually valued on of course I mentioned ROE and also price to book.
Yeah.
So look at in terms of generally, without naming any banks, generally the industry as a whole or the finance sector is actually in the price to book basis is actually trading at below the historical mean level. Right? Loans are not slowing down. Credit situation is good. Of course, the moratorium helps substantially on the balance sheet, right? Which people assume is going to be bad for the banks, but actually it's actually helping the banks. So, and it has not been performing for many years. And there are some banks, again, without naming names, that pays a very good dividend.
Yeah, exactly.
Right? And then I always joke about this, right? The backbone of any economy are the banks. If the bank collapses, right, nothing you invest in the country will help you.
Actually, there's a joke. I know we try to avoid naming names, but I have a fellow ex-colleague. He said, right, you invest in Maybank regardless of what price, because if Maybank falls, right, the whole country also don't need to think already. He said, I don't know whether, yeah.
Then how about like you mentioned things like consumers and building materials. So yeah, maybe like with consumers, because consumer companies are not known to have export markets. So is your thoughts that it's more like going back to what they were previously? That's why you're interested in these sectors?
Again, consumer is big. So if you really cut down the sector again, you're talking about consumer manufacturing or you're talking about consumer retailing.
Okay.
Consumer retailing is quite easy perspective to call a thesis in the sense, look, last 2 years was a lockdown.
Yeah.
You can't open your stores, you can't do business.
Correct.
Right? If 2022 is a year where there's no more lockdown, fingers crossed.
Yes.
Right?
Yes.
You're definitely going to do better than 2021 and 2020. That's right. So that's where the recovery comes. When it comes to manufacturing, then again, it's split between domestic and export.
Yeah.
Last 2 years, export is challenging because of all the lockdowns I mentioned. Ports actually affects the port operation as well.
Correct.
So what has been driving most of the consumer, I won't say all, more of consumer stocks in terms of manufacturing consumer has been actually been the domestic sales. Not so much of the export sales. So again, assuming that this year things go back to normal, hopefully fingers crossed again, port operations go back to more efficient, may not fully recover, but at least it become more efficient.
Yeah.
Export sales will start to kick in, start to improve. That's where that there will be another growth driver to that.
Understand.
Yeah.
Understand.
Industrial, same thing. Right? You got lockdown 1, lockdown 2, and last year, out of the sudden, you got lockdown 3.0. Industrial, you can't move. And even when you try to move, right? When you got one COVID cases, MITI will come, KKM will come, you have to shut down this, shut down that.
Yes.
So industrial has not able to operate at optimal capacity for the last 2 years. Again, fingers crossed if this year everything goes well, they are definitely going to do much better than last year. But of course, I won't say every single company will do much better last year.
Correct. Yeah. I don't want to jump the gun, but I was about to ask, but never mind. I think come back to other sectors. So if you look at the KLCI, very huge weightage on GLCs, banks, and probably I think Inari was the first tech company to be on the index, right? Now, going forward, I think one big component that Malaysia is actually known for is actually oil palm. Oil palm. And, with a lot of these European Union sanctions or whatever you call them, right? What are your thoughts on this industry going forward? I mean, a lot of people don't understand, but it's one of the most efficient crop plant to be used. But how would Malaysia go forward from here? I don't think we can invert the negative connotations that a lot of these Western countries have against oil palm. But do you see a future for oil palm? And how would you evaluate an oil palm company in Malaysia?
That's why you look at it. When I say about commodities, not only oil palm, but in this case, say palm oil, for instance, right? The demand in terms of quantity is very different from the price situation.
Yes.
the price has been volatile.
Yes.
But the demand has not been slowing down. The demand has been consistently going up year after year.
Yes.
So despite all this, sanction, blah, India I'm going to import less, China I'm going to import more. Actually, the reality is the consumption of palm oil has been constantly going up.
Yeah.
What is causing the volatility of the price, right? Of course, there are many factors, but the two biggest factor is, like it or not, palm oil is riding on the price of soy oil, soybean oil. Soybean oil is to a large extent the price maker.
Yeah.
Whereas palm oil is a price taker. You're just a follower for that.
Yeah.
Right. The second, of course, is financial instruments. All your futures tradings, all the shorties, hedges, longies, whatever you call those, right?
Yeah.
So it's actually this element that's causing that volatility of the palm oil price, not the demand. So the volatility of the oil price has actually nothing to do with the demand.
A great point. And I mean, today historical high, 5,600 per ton, metric ton, right? Was it, do you foresee this long time coming? And then how do you think it will last one? Do you think that the existing palm oil guys will actually be able to play to their advantage? And do you think it's sustainable at this price?
Okay.
Because,
First thing is, the global logistic issue has contributed partly or to a large extent of the rally of all global commodities. Not only palm oil per se, right? This is a big rally on that, right? The second is, as I mentioned, to look at palm oil prices, you must also look at soybean oil prices. The difference between palm oil and soybean is this. Soybean is a seasonal crop. You plant, you harvest, you destroy, you burn, you plant, you get, and actually they're causing more pollution than palm oil, right, to a large extent. Right?
Yes.
So because they are seasonal in nature, soybean oil can easily alter its supply much faster than palm oil.
I see.
Right. So we have to watch what is the soybean planting season or the direction. If soybean is increasing its production to a record level to actually take advantage of it, soybean price will soften.
Yeah.
And likewise, palm oil will
Soften.
Right. Third, of course, is the strength of US dollars. Right. Commodities is largely affected by the strength of US dollars. If US dollars goes stronger, commodity prices will drop or go lower. If the US dollars goes weaker, commodity prices will actually goes up.
Yeah.
Right. So to answer the fourth element of it, also which to answer your question about will our local players be able to take advantage?
Yeah.
Actually, one of the biggest reasons why you have the all-time high, right? For the last record high of 5,000 over per ton, but why isn't our plantation companies rallying in the share price? Right?
Yes.
Labor issues.
Again, okay.
You are able to see a very high price.
Yeah.
But you got production issue, you're not able to maximize,
you can't harvest,
fully capitalize on that high price. So cost structure is also very, very different. Now, our cost of production is way higher than it was 10 years ago.
Yes.
So that's why the sentiment, the ability to produce, ability to take advantage of the current oil price is not there. So that actually explains why, despite the rally in this price, the plantation companies are not rallying in terms of their share price.
Yeah.
Wow. So where is, like, for example, like gloves in your thinking? Has it changed since we last met?
No.
Sweat.
I've been very unpopular talking about
Gloves.
Unfortunately, my view, right? I think I was one of the best for glove for very long.
Yeah.
Has it ended? I think no. I think honestly, I think more challenges ahead. More challenges ahead. Let me put things in perspective. Right? Take the world's biggest glove company, for instance.
Yeah.
Before the pandemic, average glove you're talking about maybe US dollars 25 per 1,000 pieces.
Yeah. 25 to 30 ASP lah.
Because depending on how many grams.
Correct.
Let's take 25, right?
Yeah.
And their highest profit pre-pandemic was, I think, plus minus 490 million a year. 400 million, yeah. During pandemic, the prices shot up to spot prices is shot as high as $150 spot prices per 1,000, right? Of course, if you take credit orders, much maybe 100, 120 plus minus, but it's still significantly higher than 25.
Yeah.
And that's why I got this billions and billions of profit.
Yeah.
As per the last quarter, they reported 180 million of profit.
Yeah.
A quarter.
Yeah. So multiply by 4.
A drop from 2 billion.
Yeah,
from 2 billion, right? So it's more than 90% drop.
Yeah.
And if my guesstimate is correct, at that point in time, we were talking about maybe ASP is still likely between 30 to 40-ish. And that's 180 million per quarter.
Yeah.
As we are talking now, the ASP has fallen below 30. So what I'm trying to say is, even the 180 million per quarter is not the end.
Yeah.
There's still more downside pressure on to that.
Actually, I think I was looking at the data yesterday. The Frost and Sullivan report, part of the prospectus for the top, for that big
one.
for the Hong Kong one.
The Hong Kong one.
Yeah, the Hong Kong one was predicting to in 2022 ASPs would be roughly about 40-50. It's now come down to half, So yeah, I mean, if you look at that ASP, right, I think the Hong Kong analyst was saying right now is anyway 25 to 30, which is pre-pandemic already actually.
My take is, I'm even more bearish. I think you will drop
To below pre-pandemic, is it?
pre-pandemic.
Because of demand, because of supply, oversupply, is it?
I used to ask this question, which is not very again, got me very unpopular, right?
Yeah.
I used to make this statement, even during pandemic time.
Yeah.
I said, there's actually there's no glove shortages, even during pandemic time. I asked this question, have you seen any media reporting any part in the world that, say for instance, a hospital in South America, there's no glove in this hospital, or even Namibia got no glove in hospital. You don't see any. Right? Had there really been a glove shortage on the ground on hospitals, right? This is a world major news. It's going to come out, right? Hey, this hospital got no. But no.
Ran out of gloves.
No. So the question is there really a shortages of glove globally? Actually, my take is no. What has been, the demand has been on the middleman, the distributor has been stocking up. And that demand from the middleman is causing the impression there's a global glove shortages. Now, why I'm more pessimistic on the ASP? Again, there's no data available.
Yes,
my guesstimate is, based on how much they bought for the last 2 years, they have enough inventory to last the next 2 years. They will still restock.
Yes.
But they won't restock at the rate you saw at 2020.
Correct.
So correct. So now, when the demand will fall below to 2020 level, what is the trend of ASP? And not to mention, they have enough stocks for the next 2 years.
Yes.
2 to 3 years.
You'll be on a downtrend.
You'll be on a downtrend. So honestly, I don't think 25 is the end. I think you're really looking at even much lower. That's one part of the equation. Second, no, the two largest economies in the world, China and US, they've also started their own nitrile glove production plants.
Correct.
China, because it's, again, more of low penetration.
Yeah.
US is coming from very different perspective.
Yeah.
US coming for glove security.
Yeah.
That's the
National
experience
security.
last year, right? I
Yes.
have to import from these countries and there's shortages, I have to go and stock up.
Yeah.
So now these big guys, like even your Kimberly, like whatnot, all these big giants, right? They're actually exploring to build plants, not to make money,
Yeah.
but it's really more of glove security.
Yes.
Okay, now, statistic per se. Before pandemic, if you're a Malaysian glove company, I won't name names,
Yeah.
you have a 6 billion pieces per annum capacity,
Yep.
you're still losing money. Before pandemic.
Yeah.
Interesting point is why this number is important. All the expansion you saw last year for all these newcomers that come, notice all the numbers is 1 billion to 3 billion.
Yeah.
If a 6 billion capacity can make money,
What I want to say the 1-2 billion guys, right?
Now let's assume 1 billion is the break even. Let's assume it's a minimal size for a glove company.
Yeah.
Do you know how many new glove companies registered in China last year? Registered minus the unregistered, the 2,000.
Wow.
So
Insane, man.
Imagine if I just give this 2,000 company minimum 1 billion pieces a year.
Yeah.
That's 2 trillion pieces of glove from China alone. What was the global sales of glove in 2020 at the peak of the pandemic per annum?
400 or something, right?
Yeah. Max, $500 million.
$500 million. Okay, yeah.
Sorry, 500 billion pieces, half a trillion.
$500 billion.
500
Yeah, so I remember, it was
500 billion pieces of glove.
Yeah.
So can you imagine the capacity that's come up in China is madness.
Yeah.
And this is only the registered companies.
Correct.
You haven't count
even the registered ones, but here comes another, let's say, contrarian view. A lot of the numbers that were coming out of these Chinese producers, were they, in your point of view, legitimate? Because now you're starting to see what I think one of the largest ones, start with I, they were promising this size, this capacity expansion, but they did not actually deliver on that capacity expansion. So it doesn't matter, is it, from your point of view?
This is not under-delivering. It has always been the trend, even 10 years ago, 2009, 2008, right? Even local glove companies, they actually announce, okay, this is my planned capacity for this year.
Yeah.
But at the end of the time, they'll actually readjust the capacity to look at market situation.
I see.
Of course.
most of the time they only maybe deliver 70%, 80% of what is the planned capacity.
Yeah.
So it's common.
It's very easy to ramp up production because it's not very technologically advanced line. It's not like a wafer fab, right? It takes you a few months to erect a line. I think 1-2 months you probably get a line up and running, right?
I would say so, yes, but of course it depends on the supply side. I mean, if you can get the machineries, the formers in place, shortages of those things, only those things delays.
Yeah.
Right? But is it... no, what came to mind was this is off a bit, right?
Yeah.
See, you notice one common characteristic of a glove plant. It's boring.
It's what?
It's boring.
Yeah. It's boring. It's very boring.
It's brick.
Mortar,
line, hot room, whatever right?
Yeah.
Very simple. Why? Because each piece of glove costs only a few cents.
Correct.
Okay. So the question is, do you think the existing players can't afford to build a funky factory full of glasses? They can. But in terms of production logic,
why?
It doesn't make sense.
Yeah.
Right? Because these are all costs.
Yes,
you're producing something that costs a few cents.
It's a commoditized product anyway.
Exactly.
Yeah.
So, having a funky factory is wow to investors. But if you know the business, that's it, it's a different story.
It's a margins business. It's a scale game, commoditized product, margins business.
Let's give numbers. Pre-pandemic, 6 billion pieces per annum is not small. But at 6 billion, you struggle to make a profit at 6 billion pieces per annum.
Yeah. What are the areas in addition to that you would avoid? Like in the economy, you would avoid investing?
Well, I always avoid investing in stocks where there's too much hype. And it's always reflected by the high PE. People are willing to pay high PE. Take Meta, for instance, or Facebook. It's a very good example.
Yeah.
There's so much hype onto it. A 5% fall in profit costs a 26% single day drop in share price.
Yeah.
No, because when there's too much hype, a slight disappointment can cause a major reversal.
Yeah, because the perception.
Exactly. Right? So likewise, right? If everybody invests in this stock because I expect the profit to double.
Yeah.
But if at the end you only deliver 80%, which is still impressive, but because it didn't hit your 100% profit, people are going to sell.
Yeah. What industries will you kind of like be very, very worried in Malaysia?
What's frothy right now? What are the high expectation industries?
Still tech.
That's the highest. That has been the...
Right.
Yeah.
Okay.
It's the highest.
I want to steer towards a little bit more specific. Now, a lot of companies have gone PN17 or this. A lot of... the moratorium for Bursa says that you, during the COVID times, even though you are technically categorized as PN17, but we'll hold it until things get better. Aviation has suffered. Oil and gas has suffered. I think the latest scandal of Sabah has gotten a lot of people. No, actually, this morning it was so funny, Peter. Why I want to bring this up was, he is actually a French Canadian based in Malaysia, and he's starting I think you've met him before. He's actually starting a startup here. And what he brought up was a lot about corporate governance, because these people take in, these large companies take in huge amounts of public money.
Okay.
Gone. And they kind of get away scot-free. And one, probably as an investor, how to avoid them generally. Two, do you think we collectively as investors can do more in terms of activism or corporate governance, requiring these people to be more transparent, that they get more governance in some sense? Your thoughts, actually? See,
that's what I mentioned, right? All these things are very subjective in nature.
Yes,
let's take your earlier example, but without naming names.
Yes.
Okay, let's do it another way, right?
Yeah.
I raised a lot of money.
Yeah.
And I'm going to tell you, I'm going to build a factory that's producing the hottest item now.
Okay.
Which I know this factory will not make it.
Yeah.
But that's what investors want. Right?
They want the hype.
I want the hype. So I'm going to raise money. And guess what? Yeah. Investors all jump into it.
Yeah.
Riding on it. And I build the factory.
Yeah.
I build the factory. I deliver what I promised.
Yes.
Knowing very well, no, this will make it, but this is what you all want.
Yeah.
3 years later down the road, the whole business collapsed. Right? So how do you draw the line of corporate governance? I'm giving what investors want.
Yeah.
Am I siphoning money out? No, I am building what you all wanted me to build.
Correct.
You see,
Yes,
it's a grey area, right? So
Yeah.
in terms of legality, you cannot say, hey, no, there's no corporate governance.
Correct.
But
Correct.
the intention.
The intention. Yeah. So maybe let's dig a little bit deeper. Let's just say some of these companies, they get into trouble. Let's say they build a factory, they get into trouble. And yet here, they have institutional money going to, how would I say, hold their bags or whatever. And this institutional money, the strength of where their balance sheet comes from is actually from your normal mom and pops, your retirement funds and all these kind of things. And they are somewhat either through hidden hands or whatever, they are kind of forced to bail these companies out. So what do you think in terms of avoidance or even for investors that have no voice for these kind of companies in a way?
Unfortunately, there's really nothing much we can do.
We can't solve world hunger, Peter.
Well, see, institutional money, there's technically two types.
Yeah.
One is your voluntary contribution. You mean to say all the unit trusts that you buy.
Correct.
Those is within your call.
Yes.
The other one is forced contribution.
Correct.
What can you do?
You can't. Okay.
Yeah, that's shared prosperity.
Or shared pain.
Shared pain.
You gotta take the good and the bad.
Yeah. It's a package. Yeah.
Look, do you have any more questions on the economy?
I think probably we've not covered construction. I think we may not.
But he did mention, I think, construction, industrial, so that it's more of a COVID recovery play.
Yeah.
No, not sure about construction. Because construction in Malaysia,
Oh, you're saying buildings material.
Building
material.
materials.
Yes.
Yes.
construction is different. Construction is very news flow.
Yes, correct. The price goes up before the thing has even built, right?
Yeah, before the announcement of them winning the project.
But there's this term on the street, Peter. I'm pretty sure you heard of it. Buy and rumor, sell on news.
Which is true. That most aptly describe the construction sector in Malaysia.
Yeah.
But so it's going to wait 4 years, right?
Nobody ask this question, right? How much is Gamuda making for MRT project? Nobody knows.
Yeah.
Nobody cares. Right?
But they know the share price.
I know they won the project. I just go punt on it. Few years later, how much profit did Gamuda make on MRT? Honestly, I don't think even the analyst knows.
Yeah.
They don't care. That's the worst part.
They don't care.
Because they think in quarters, right? So this one you're like 4 years, 3 years. Yeah.
I won't go and say, this profit, how much attribute to this project? No. Or lump sum, you got this profit? Oh, good.
Okay, back to you, MJ.
I do want to ask, like, how's the... No, maybe this one on the personal side. Like, how's your charity doing?
Oh, yeah, I think last 2 years was actually extremely busy. Actually, the COVID issue, right?
Wow. Okay.
I'm more of those proponents at the early stage of opening up the economy.
Yeah.
Actually, you make a very good point earlier part of it. Remember when the economy after the first lockdown?
Yes.
When the government was trying to open up, there's a lot of proponents open up, and a lot of people are saying, no, you should lock down further.
Yeah, exactly.
This describes the situation very, very good. Those who are against it are those who are well-to-do.
Yeah, exactly.
I have my monthly salary. I
Exactly.
can stay comfortably at home. I would say, hey, my life is more important. Please stay locked down.
Yeah.
But those are the daily wage earners.
Oh, yes.
Right? They ask you this question, no? My children and my family is hungry.
They take the risk.
I'll take the risk.
Yes.
What other option do I have?
I actually had this, sorry to cut you off, but I actually had this view, which actually, ironically, because like family members and extended uncles, my ones are also in that period where they don't have to work and they can just chill and
Correct.
So I just say, look, you're so pro lockdown and that, but will you say that you feel for all these people without all this, like, because in an economy, in a situation like that, there are two things to balance. One is the safety health concern, like health safety and economic safety, right? You cannot say one is more important than others. Then you're just being essentially selfish that I'm just gonna do one. So I say, look, since you're so pro lockdown, I think to make it fair for everybody, right? Why not, right? Those who are in favor of a full lockdown, fine. But you must commit half your EPF to help out the other group.
I agree
So
with that.
then I say, yes or no? Silent. So the logic is very simple for me. It's like, if you say you care about, because the argument is, I want
Care
this
about
so
the
that,
safety.
I say care about the safety of the country and so that everyone can go back to normal. I say, fine, but look, nobody has your privilege. The people who would take the risk if they were given a chance. So will you give half your EPF? Usually the answer is no. Then I say, then you're not, actually you don't really care.
You're genuine.
You're not exactly genuine. You're seeing purely from a perspective. I said, will you give half your APF, and then they shoot back to me and they say, "Would you give half your APF?" I said, "But I'm not for lockdown."
Hey, but actually, I have another analogy.
Yeah.
For those of your relatives, including mine who are well-to-do and all that, can you imagine, back to your point about the daily wage workers, you live in the comfort of your home, you order Grab, whatever. Let's stop your garbage service for 1 week.
Yeah.
Very simple, ma. No one picks up your trash for 1 week. See whether you're for lockdown or not.
And like EPF is like 800 million now. 800
billion.
Yeah, 400 billion. I think we can do something.
We can stimulate something about it.
We can do something about
400
it.
billion is 10x, no.
Yeah.
100x 1 MDB.
So that's why like all these people, like, it's what I call virtue signaling. They're like, oh, look at me. Like, then they make themselves feel good. They give donation here and there, this tabung, that tabung. And I said, no, you need to give to solve the problem, the sick, because it's going to be a problem, a huge problem. And unfortunately, the people who can't afford a lockdown tend to have more children, right? Whether you like it or not, right? They tend to have more children. I think you would know this, right? So you need more capital than just hope, you know? You actually half
index.
APF. I said, then done. So anyway, so how's the charity? Like, why was it busy during the lockdown? Because I assume that in a lockdown you can't do much, right?
No, we got a lot of requests from these communities.
Right.
So I think from until last year, until the third lockdown, we've totally distributed provisions. Actually, each provision, we don't give cash. We actually buy provision like rice, flour, which can last them for a month.
Yeah.
And each set actually costs around 250 ringgit.
Okay.
We actually provided for 1,500 families.
Wow, so that's
quite a lot of money.
it's probably 500,000 easily, more than that.
From collection, we actually collect money to actually do that.
Yeah.
So just when I thought things have eased down a bit, then came the flood.
Double whammy.
Oh yes, how did the flood affect?
No, because same thing, See,
Right.
Klang, we all quite well covered in media. A lot of people, even very superstar, also go and help.
Yes.
We go to the estate areas. Like for instance, Kuala Selangor. Actually, Kuala Selangor was also affected by the flood, but not capturing the headlines.
Yeah.
So what we did was we sent provisions to the estate, directly to the estates to actually help them ease out.
How do these people reach you and how do they find out?
Because see, what we do is, again, we publish what we do in Facebook, not because we want publicity.
Yes.
To us, the reason is more of accountability.
Yes.
Because we collect these funds from public.
Yes.
So our purpose of publishing Facebook is not actually to gain popularity, but it's actually just to be accountable to tell the donors.
Correct.
Right? Well, this is money and this is what we give out
This
to
is
projects.
your IR work, investor relations work for your charity.
Yeah,
money,
no, people say, if you don't, imagine I don't publish any pictures, right? What use money for what?
Pergi mana? Pocket mana?
So, but also because of this, a lot of those affected families, they contact us directly from our Facebook.
I see.
So that's how we got into all these leads. We even got help requests from Pulau Gaya.
In Sabah.
Sabah. Wow.
Sabah.
Yeah, we got. But
how does the shipment work?
we can't. So what we do is
Yeah.
we ask them to send their details, their IC.
Yeah,
Of course we will vet through it. Then we actually send cash over.
I see.
Equivalent to 50 cash we actually send over. Because we can't send
How you mobilize resources over, right?
Yeah.
Okay.
Wow. But then in terms of your charity, like, did the lessons go on as well? And did it go?
He's talking about your school.
No,
school,
we can't.
yeah.
We only start to reopen technically this year.
Okay.
Because we're also quite concerned about the children's condition.
So when there was nothing going on, like, how do you all manage the curriculum? Because I know, even kids who are not who are privileged also had a lot of issues adjusting with the schedule. Like, they were doing SPM in March or something.
SPM is being done now,
Yeah. I think the English paper just happened yesterday.
What we did was we have Zoom. But then another challenge, right? These are the underserved communities.
Yeah.
Honestly, even a basic handset is a privilege.
Yes.
We do face that challenge initially, right? I mean, and to us, it's common for them that they don't even have a handset.
Yep.
We live in an urban bubble. A lot of these things are quite invincible to a lot of people.
Yeah,
actually.
that's right.
Yeah.
Wow. So but then what surprised you, I guess, as a result of managing both the school and the charity during this lockdown? What kind of surprised you, I guess? Anything,
Surprise,
The surprise can be good, it could be bad.
Or maybe something memorable from these 2 years of struggle, I guess.
I guess the thing is, it really helps to see what being truly Malaysian is. You look at for the last 2 years, right? This lockdown, really on the ground, race doesn't matter.
Yeah.
It's only at the politicians level, right?
Yeah.
that race
And the
really
headline
matters.
news that the media that they want to play lah. Yeah.
Like our provisions, we go to all races.
Yes.
Right? It's not single races. And you can see that they're really appreciative of it.
Yes.
Right? Then even some of them say, we'll pray for you.
Yeah.
Wow.
Yeah. So that's the, unfortunately, that's like the bright side of any challenges
Yes.
or any tragedies that happen. You really got truly Malaysian, where all the races really get together
Yeah.
and look at the issue rather than what is the color of your skin.
Yes.
Yep.
Yeah.
So like if someone wants to help you in your good work, or maybe even become a teacher, or how should they go about it to help you out in what you're doing?
Yeah, they can apply, and then we can see whether what role they wish to play, whether
Right.
they have space for that role.
Right. And are these sorry for the, I mean, you don't have to share if you don't, but like will they be paid, or it's
Oh no,
pure
no,
bono?
no salary.
Pro bono. Okay, so
Purely pro
so it's
bono.
pure
From
straight
the heart. you pay in they're being paid in emotions. Emotional bank.
So yeah, anything else, John, you have for
I
people?
probably something personal but also related to his to his career. So book 1, book 2. Will there be a book 3?
What's it going to be about? Actually, if there was a book 3, what would be?
Yeah, what would it be like?
No, there's still a lot of things that have not been shared, right?
Yeah.
Because analysis is multi-aspect.
Correct.
So even book 1 and book 2 is really not covering the whole aspect of
Yes.
what analysis is about.
Yeah.
Yes.
But what I'm really toying with the idea of then being a call request is about a book about fund management. Yeah.
And it was a segue to my last or probably second last question is that why isn't you can choose two sides of the coins. I feel, I mean, I'm an outsider from the industry, you know that, Peter. When I look at and I benchmark countries like the US or EU, probably still a little bit more laggard. But why hasn't capital markets developed as fast in this side of the world as comparatively to the rest of the world, if I would say, or more advanced? What do you think are the bottlenecks? Is it because of over-regulation? Is it because of overlapping roles within the regulators? Or is it because just Malaysia doesn't have a mature enough capital market system here? I mean, from your thoughts.
You talk about capital market, it depends on what category of capital market you're talking about.
Yeah.
Right. You talk purely, said for instance, on equities or on bonds per se, right?
Yes.
It coincides with the size of the corporates.
Mm,
Like it or not, the global giants are US, Europe,
correct.
China. That's it.
Yes.
Right. Even if you look at, to a certain extent, Singapore,
Yeah,
they also don't have giants as the likes of those countries.
I understand.
Temasek, maybe lah.
No, Temasek is a GLC.
It's a sovereign wealth fund.
But
Yeah.
you talk about in terms of corporates, like
Corporates,
So your
the likes of Apple's, Microsoft.
Yeah, so
right?
your
Because
DBS is-
coincides.
Popiah skin lah.
Yeah.
Popiah skin lah.
Yeah.
Popiah skin.
And the Razer mouse.
Got. What was that? Chunky.
Chunky.
Oh,
Popiah
Chunky.
skin and the Razer.
Yeah,
Razer mouse.
Razer mouse. Yeah, because I mean, here, I come across this comment from a lot of our followers or even students, right? It said, why is there no instruments to short the market? For example. Then why is there no 2x or 3x or even 10x leverage futures? These kind of instruments, that's on one spectrum. The other spectrum is this. In terms of corporate governance, in terms of raising capital here, a lot of Malaysian companies, we start to see moving outside, raising money in Singapore, putting incubators elsewhere rather than in Malaysia. So is that because of the very restrictive capital markets from your point of view here? Or do you think that it's just, we just don't have that kind of capability or talent to grow that kind of size of company?
I think there's again multiple aspects to that, right? You talk about shorting the market. We used to have it. Almost until the Asian financial crisis. Just like it or not, right? These instruments cut both ways.
Yes.
If there is a bear market, right, all these instruments are going to cause a big havoc.
Oh,
you're not
yes.
talking about 20% correction in your
Yeah,
index, right?
yeah, it's going to be worse than that.
40-50% easily. And that's
Yeah.
exactly what happened during the Asian financial crisis.
Correct.
So that those instruments are not being allowed, like it or not, to a large extent, is to protect retail investors. Right? So you're actually trying to reduce the volatility, right, in case something goes wrong. When I talk about those incubators, company going overseas, right? Well, I think we don't have the ecosystem to support. We are not ready.
I'm aligned with you.
We are not ready to house this kind of new ventures or new business models. The ecosystem is just not there. I think, unfortunately, I think the regulators also don't understand what the hell these people are doing.
You know, the reason why I say this is because, like what you said, before the podcast, there's IPOs, but there's nothing exciting. Because if you see, for me, I look at a lot of the IPOs that are coming, Senheng and all that kind of thing, right? It's probably a brick and mortar business has not innovated, second, third generation, and then the either is most likely an exit, liquidity and all that. I don't see something like a Grab. I'm not expecting sexy things like a Meta or whatever, but at least some novel business idea or some very intuitive, innovative business idea generating and then now trying to raise capital, you see. I think I'm just trying to figure out, is it because our Asian or Malaysian society is so conservative that second, third generation, they rather keep their companies private, and.
See, what was interesting about this is that was what LIP was supposed to address.
Correct, exactly.
But then at the same time, it's not a stated requirement, or it's quite silent, but the regulators expect anybody applying for LIP to make a profit.
Correct.
You see
yes.
that's a problem.
And the name, Leading Entrepreneur Accelerator Platform, right? The name already conjures up that kind of alignment, which is like no profit, moonshots kind of thing.
You're just selling ideas.
Yes.
And it's to sophisticated investors who are willing to take the risk.
Yes.
But although no black and white requirement for profit, but they still expect to make a profit.
I have a simple explanation. I think too many 60-year-olds are running the
regulator market.
Markets, that's my honest opinion. But anyway, thanks so much for being on the podcast. Look, guys, if you want to find Peter, not very difficult to find. Peter Lim on Facebook.
Shiny head, very
Trident
shiny head.
Analytics. But if you ever get a DM from Peter, just make sure, right, not all of them are Peter's.
Yes.
Real Peter.
No, actually, I don't DM people.
Exactly.
Yeah, you don't DM. So there's so many scams around.
Because
right
I know that you did report once, I think a couple of months back.
3-4 times already.
3-4 times already, right? People are impersonating you and all that. So guys, just be careful of that. But if you really want to find Peter, check out his stuff on Trident Analytics and his personal Facebook. I think you can follow him. You can try to add him. He may not add you. But and I hope you enjoyed the podcast. Always a pleasure,
it's a
Peter,
pleasure.
to get you on. And definitely looking forward to a part 3 maybe in 6 months, 12
and also
months.
book 3.
I wonder what you think of gloves, right, in 6 months. Okay, guys. We'll call it to an end. And, like, comment, subscribe, the usuals. Share it with your friend if you like this sort of stuff. Click on the bell so that you know when new videos come out, and see you in the next podcast.